Well, we may be in Washington today, but investors and your money are going to be paying close attention to what is happening about 2,000 miles west of here in Jackson Hole, Wyoming. Federal Reserve Chairman Jay Powell is speaking at the Fed's annual symposium there later on today. His speech coming just days after President Trump says he was, quote, not thrilled with the Fed raising rates. Joining us bright and early this morning, Mark Avalone. He is president of Potomac Wealth Advisors, and good to see you on set, Mark. Thanks for inviting us to your town. We appreciate it.
Good to be here.
What do you want to hear from the Federal Reserve today?
Well, I want to hear what they've been saying, that the economy is strong, that it's robust, and it can withstand even more rate hikes. People are worried about if the Fed raises rates, but they're only raising rates if the data is good. And thus far, the data has been strong. Now, I don't think they're going to accelerate the pace of hikes, and that's really what the market should worry about. If they come out very aggressive, then that could be a pullback.
Put on your political hat, because we're here. Do you think the president's comments will in any way influence what the Federal Reserve does?
No, I don't think at all. I think he's going to bluster, he's going to posture, he's going to try to strong-arm them. They're not going to cave. In fact, they might even dig their heels in more. Fierce independence.
To prove a point.
To prove a point. The Fed's always been independent.
The Federal Reserve, you know, as we've said, is not a part of the government necessarily.
No.
The employees of the Federal Reserve Board do not get government pensions or health care. They are basically a banking organization that operates with the blessing of Congress. So you think they're going to go ahead and do what they feel is best for the economy and their mandates, inflation and maximizing employment.
Right. And right now, inflation is a little bit of a risk with the strong labor market. Wages have been rising 2.7% for the past 3 months. That's the first we've had in almost a decade at that pace. So the Fed's going to be looking at the inflationary pressures. Part of that is actually good economic news. Strong wages, good for consumers.
When your clients call you today, hey, I saw you on Worldwide Exchange, great job. And they ask you then, what do I need to think more about? Do you tell them it's the Fed? Do you tell them it's trade? Do you tell them it's Trump? Do you tell them it's something else? Is it corporate earnings? What are the key things that we need to? There's so much going on. How do we kind of cut through it?
When you cut through it, you focus on corporate earnings. Corporate earnings is the #1 driver for stock prices. You can also look at the underlying reasons for that, a strong GDP, strong global growth. You want to look at the strength of the consumer, low debt levels, high wages, inflation is moderate. It's almost a rosy picture for stock.
Too rosy?
The warning signs are out there. One of the warning signs is that 10-year, the drop in interest rates, the lagging financial sector. This market's had a very narrow focus with tech and consumer discretionary, which is a lot of Amazon and Netflix. So if you take away that, what's the rest of the market doing? I call it a halitosis market. There's
bad breath market.
There's bad breath in this market.
If I remember the commercials correctly, Mark.
It's sort of. So what we want to see is we want to see it expand out. We want to see better breadth in the market. We want to see financials shrug off the fact that interest rates are a little low, because those two, that's a warning sign for me.
Yeah, the bond market either is telling us a different story, or it's simply a reflection of perhaps foreign capital coming here because of what's happening in Turkey, Italy, the junk bond market. Maybe we're starting to see some movement into treasuries. Do you think that's what it is, or is it saying, warning sign ahead, we're just earlier than the stock market?
It could be either. Bond market, smart money's in the bond market, but I really think now...
That's what they say, by the way.
Well, that's true. But I think right now, Venezuela, Turkey, the Italian banking system's been in a little bit of crisis, comes in and out of the headlines.
It might be our top story were it not for Turkey, trade, tariffs, and Trump, the 4 Ts.
But that's true. And you could also look at Deutsche Bank in there as a little weak. So European financials, I think the bond market and the financial sector are saying the same thing, that there's an unknown out there somewhere, and I think that's where it's lurking.
I think somebody from this town said there are known unknowns and known knowns and unknown unknowns.
With a much more fancy accent than I do.
Exactly. Mark Avalone, we really appreciate your insights so early on a Friday. Great stuff going into the weekend. Appreciate it.
Good to be here.